Welcome to Money Briefing. Major refund payments exceeding $4,000 are projected to hit bank accounts within the next several weeks. Top officials, including a chief global strategist at JP Morgan, the Treasury Secretary, and the White House economic advisor, have all been doubling down on these statements. We are talking about well over $4,000 per household for millions of households, totaling hundreds of billions of dollars flowing into the economy. This is being compared directly to the stimulus checks Americans received in 2020 and 2021. The scale is massive and the timing is significant. Today we are breaking down exactly what is happening, who qualifies, and why 2026 is shaping up to be a year of unprecedented money flowing to American households. Multiple high-profile officials have stated that 2026 is likely to bring the largest tax refunds in the history of this country for the majority of Americans. The Treasury Secretary has indicated hundreds of billions of dollars will be paid out. This is not speculation from random sources. These statements are coming directly from the top levels of government and major financial institutions. The driving force behind these massive refunds is the passage of the One Big Beautiful Bill, the large reconciliation and tax cut legislation signed into law on July 4, 2025. While that bill passed months ago, many of the tax benefits have not actually been felt by the majority of people yet. That changes when Americans file their tax returns in early 2026 for the 2025 tax year. According to projections, the average refund is expected to exceed $4,100 per individual or household. To put this in perspective, the IRS reports that the general average refund typically runs around $3,100. This represents an increase of over $1,000 compared to normal refund cycles. Officials are directly comparing these refund payments to the three stimulus checks distributed during 2020 and 2021. Those three payments totaled $3,200 per eligible individual. The $1,200 payment in April 2020, the $600 payment in December 2020, and the $1,400 payment in March 2021 provided critical support to millions of Americans during the pandemic. The current projections suggest these tax refunds will exceed that $3,200 stimulus total in a single payment. For households, the combined impact could be significantly larger depending on family size and specific tax situations. This is being described as round one of what officials are projecting as multiple rounds of stimulative payments throughout 2026. The framework being established suggests this is just the beginning of substantial money flowing to American households over the coming year. Beyond the tax refunds, multiple officials have indicated that a $2,000 dividend or stimulus check payment may also be coming later in 2026. The president has mentioned this multiple times, as have the Treasury Secretary, the White House economic advisor, and the press secretary. While official details on timing have not been released, the consistent messaging suggests this additional payment is being seriously planned. If both the enhanced tax refund and the $2,000 dividend payment materialize, Americans could see over $6,000 in combined payments during 2026. For families with children, the amounts could be even higher due to enhanced child tax credit provisions. Multiple factors are converging to make 2026 potentially the most significant year for money flowing to American households in recent memory. The tax cut bill provisions are kicking in, enhanced refunds are being processed, additional stimulus discussions are ongoing. And there is a significant political factor at play. 2026 is a midterm election year. Historically, election cycles tend to bring increased government generosity. Promises are made and money gets distributed. This pattern has repeated across multiple administrations and political parties. The incentive structure of election years tends to favor policies that put money directly into voters' pockets. The combination of genuine tax reform benefits and election year dynamics creates conditions for substantial payments reaching millions of households. Whether one views this cynically or optimistically, the practical result is the same: more money flowing to more people. Officials are also projecting significant economic activity resulting from these payments. When Americans receive tax refund payments, the majority spend that money relatively quickly on various goods and services. This spending pattern creates ripple effects throughout the economy. Unlike savings that sit in bank accounts, consumer spending generates immediate economic activity. Retailers see increased sales. Service providers see more customers. Businesses hire more workers. The velocity of money through the economy increases. This is precisely what policymakers are counting on. The hundreds of billions of dollars flowing through refunds is expected to provide substantial economic stimulus without requiring new legislation or additional deficit spending. The tax cuts already passed are simply now being realized by taxpayers. Additionally, once taxpayers adjust their withholdings for 2026 based on the new tax law, many will see increased take-home pay in each paycheck throughout the year. This ongoing benefit extends beyond the one-time refund and provides sustained household income increases. A critical point needs addressing for those who do not typically file tax returns due to low income. Many assume that because they do not owe taxes, there is no money available for them in this process. That assumption may be leaving money on the table. The enhanced child tax credit includes a refundable portion. The additional child tax credit, which is the refundable component, has increased by 10% compared to last year. The amount is now $2,200 per child, with the refundable portion at $1,900. This means even those who owe no taxes can receive actual cash payments for qualifying children. There are millions of Americans who do not file tax returns because they believe no benefit exists for them. In many cases, this is incorrect. Refundable tax credits can result in actual payments even when no taxes are owed. The federal government will not proactively reach out to inform people of money they are leaving unclaimed. It is the responsibility of taxpayers to file and claim these credits. Anyone with dependents who has not been filing returns should seriously consider whether filing might result in refundable credit payments. The amounts can be significant, potentially thousands of dollars per child. The IRS typically begins processing tax returns in late January. Early filers who submit returns as soon as filing opens and claim refunds via direct deposit typically see payments within 21 days. This means the first wave of these enhanced refunds could begin hitting bank accounts as early as mid to late February 2026. The refund cycle continues throughout the spring as more Americans file their returns. The bulk of refunds typically flow during February, March, and April. Those filing closer to the deadline or claiming certain credits that require additional processing may see payments later in the cycle. For the potential $2,000 dividend payment discussed by officials, no specific timeline has been announced. Based on the rhetoric, this appears to be targeted for later in 2026, possibly in the second half of the year as midterm elections approach. However, until official guidance is released, the exact timing remains speculative. Americans wanting to maximize their benefits from these provisions should take several steps. First, gather all necessary tax documents early. W-2 forms, 1099 forms, and records of any deductible expenses should be organized before filing season begins. Second, understand what credits and deductions you may qualify for. The tax law changes included multiple provisions that could benefit different taxpayers in different ways. Taking time to understand these provisions or working with a tax professional can ensure nothing is missed. Third, file early. Those who file as soon as the IRS begins accepting returns and choose direct deposit will receive refunds fastest. Waiting until April means waiting months longer for money that could be in your account by late February. Fourth, if you have not been filing because you assumed no benefit existed, reconsider that assumption. Especially for those with children, refundable credits can result in substantial payments even with zero tax liability. For Social Security recipients and other beneficiaries on fixed incomes, these provisions may provide additional financial breathing room. Many seniors work part-time, have retirement account withdrawals, or have other income sources that could result in enhanced refunds under the new tax law. Even those whose primary income is Social Security may benefit if they have dependents qualifying for child tax credits or if they have other income sources. The threshold changes in the new tax law affect calculations for many different taxpayers in many different circumstances. Additionally, if the $2,000 dividend payment materializes as officials have suggested, that would presumably go to a broad population including seniors and beneficiaries. Details on eligibility for that payment have not been specified, but stimulus payments historically have included Social Security recipients. While the prospect of larger refunds is welcome news for most Americans, there are some considerations worth noting. Tax refunds represent money that was overwithheld from paychecks throughout the year. In essence, it is money that was always yours, simply being returned. Some financial advisors suggest adjusting withholding to receive more money in each paycheck rather than waiting for an annual refund. However, for many Americans, the forced savings aspect of overwithholding provides discipline they might not otherwise have. Receiving a large refund check can enable major purchases, debt payoff, or savings contributions that might not happen with smaller incremental amounts. The economic stimulus aspect also carries considerations. When large amounts of money flow into the economy rapidly, there is potential for inflationary pressure. This is something policymakers are presumably monitoring as these payments go out. The statements from top officials paint a picture of 2026 as a year of substantial money flowing to American households. The enhanced tax refunds, potential dividend payments, and ongoing tax cut benefits represent multiple streams of financial support. Whether all projections materialize exactly as described remains to be seen. Political promises and economic projections do not always align with eventual reality. However, the tax law has already been passed and signed. The enhanced refunds tied to that legislation are not speculative. They are mathematical consequences of law changes already in effect. Money Briefing will continue monitoring all developments related to these payments, additional stimulus discussions, and any changes that affect when and how money reaches American households. When filing season opens, we will provide updates on refund processing timelines and any issues affecting payment distribution. That is your Money Briefing for today.